Interesting developments here, and you got to wonder, 2 o'clock in the morning, what provoked President Trump to actually post that in the middle of the night randomly?
I'm going to say this. I'm going to probably regret it, but the market is no longer, wait for it, Mel, terrified. You see what I did there?
You are correct, sir.
That's pretty awful, actually. No, I mean, what provokes it? What makes him do that 2 o'clock in the morning? I mean, the fact that the market didn't move, to me, suggests that it's sort of this under-promise, over-deliver, and come out and say how difficult they are to negotiate with, and then a week later, you know what, they're difficult to negotiate with, but
we got a deal.
We got a deal done, and I think that's what the market's probably handicapping.
I mean, it's such even the words. I mean, does China even think they're negotiating? I mean, there's that you've been said China's economy has been the largest in 18 of the last 20 centuries. Are they negotiating with us, or are they just playing the long game? There's so many things that are unclear, but obviously people are working on it, and there will be some outcome that'll probably be better than the current uncertainty.
Right. What did happen today? Lower yields on the back of weaker data.
Lower yields, and then when you look at the market and you look at President Trump, he's got to work out these trade deals before the midterm election campaign starts in earnest. So I would say by fall of this year, because the elections are in 2026, by fall of this year, you're either going to see good deals get done, bad deals get done, or they're just going to rest the case on it. Something will get done by the fall. That's positive for the market.
Resting the case, I mean, this is what he did with the Ukraine war situation, which I think is interesting. I think it surprised a lot of people. He's kind of just stepped away. And some of the commentary that you see is kind of lowering expectations for something with China. Pretty soon we're going to get to that 90-day sort of situation. Something's got to give there. They'll probably push it out one way or another. But I think there's another scenario here where, this tax bill, I'm going to use the name that you guys, it's the goofiest thing that I've ever heard of a bill. You know what I mean? That sort of thing. They're going to this could really start to conflate a little bit, right? So if you are our allies, if you are China, well, they're our adversary, but if you're Mexico and you're Canada or EU and they're some of our biggest trading partners, and you see that there's a break within the president's party just to get one of the initiatives through, you might kind of wait the whole thing out, right? So his approval rating is dropping on the economy, and so you think about what's going on here. If we start seeing weakening data and the Fed just stays put a little bit and you can't get the tax bill done and then no one's come to the table, it could really get a little bit messy here in the back half of the year.
Let's say all that is happening. Yeah. And today you can make the argument that all of those things were actually in place, and that's why we saw lower yields. Lower yields because people are betting that the Fed will step in later in the year. So was that in the end a positive thing for the markets? And that's why the markets seem so inured to this True Social post.
Look, I mean, the Fed cut rates in September. Yields went straight up. And, there's a very good chance if they cut again, the yields will do the same thing. We've talked about this. I know we all agree. I mean, as much as they control the front end of the yield curve, they don't control anything else. And bond market, I think the bond vigilantes are probably upset how weak the data has been, because the only thing keeping yields lower is the fact that things have been slowing down. I think if it weren't for that, yields would be significantly higher, and I still think yields go higher from here.
Where do you think yields go?
I'm in the lower.
Still in the range?
Yeah, lower yields. I mean, look, again, never once did we close above 5%. Never once we were there above for 15 minutes about a year and a half ago. It has not been higher for longer, and the real question is, despite all of the record shorts, right? People are betting for higher yields.
Yeah, and Robert Shiller put out a chart based on the correlation or lack thereof between higher 10-year yields and the market performance. For the last 40 years, there's no correlation. Or I shouldn't say that, since 1940. No correlation. And when you look at it, there's been years where the interest rate is above 8% and the market returns are 19%. So I think we're worried about, much ado about nothing. But to Carter's point, we haven't seen rates really explode to the upside as of yet. I'm in the lower rates camp as well. And the market's not paying attention to tariffs.
Right.
Or China, or at all, to anything.